Everyone to Inside Traders, a show where we talk about what the big banks and institutions are buying. All of these trades are hidden from the markets and aren't reflected in the normal price action. And the order flow gives a strong indication of buy and sell for companies across the market. So on this show, we not only review the order flow and kind of like discuss what people are buying and selling, but we also just explore the tenets of trading from a first principles and beginner perspective, which is always, I think, a great way to approach anything. And so I'm no expert, but I've spent a tremendous amount of money and a tremendous amount of time trying to understand these markets. And I think I'm kind of getting somewhere. Slowly, very slowly, and not surely, but nothing is sure in markets. Everything is everything is probabilistic. There's a lot of stats and probabilities in markets. So welcome to the show. My name is Caleb. I'm your host. Normally I have my AI here with me. I'm giving him the day off so he can go do, large language model stuff. So, what a day we had ourselves today. I broke even, stealing defeat from the jaws of victory or whatever that is. Not really. I mean, I broke even basically. You really, I cannot stress this enough from my own experience trying to get into trading. You really have to find indicators and external signals for buying and selling, because I really think that there is something with these charts that it's just our brains are not wired for it. And when things are high, you want to buy. When things are low, you think they're going to keep going lower. Basically, you think the trend is going to keep trending. So here we're looking at Tesla. And I think we're definitely in a bull trend. I think we've been in a bull trend for a long time. I think it's real easy to get squeezed out of that bull trend if you play with options, because you can get nuked or you can get levered out in these different ways. And one of the things that I talk about on this show that I'm really determined to learn is how do you profit from declines? Because we all know how to profit when the market goes up. Everyone has something, right? Like if you're watching a show like this, you're in the markets, you got some stocks. Generally, when the market goes up, it's going to be easier to make money because you have those assets. But there should be plenty of opportunity to take advantage of volatility on both sides of the price. And especially if you know the longer term trend. And so if you can be a bear on the day and a bull on the week, and then a bear on the month, but a bull on the year, that is the kind of stuff that I think options are really good for. I'm not pretending to have figured this out, but we're here to learn, right? And so one of the things that has been kind of interesting to me with trading options is I've been in stocks forever. I think, well over a decade I've been playing with stocks, but options are somewhat new, a couple of years. Definitely just the idea of trading an option is very new. And it really is a microcosm of the lifespan or the life cycle of a kind of of an investor, of a whole investment. And so I can see through my own history, all of these different places in my investing career where I made really good decisions. And guess what? You really only need 3 good decisions. You can make a lot of bad decisions after you make one good one. And so there is a principle, I think, in the options market that you do have to be right once in a while, but that generally can pay off a lot of bad debts. Now, bets, or maybe I said bets. I don't know. But either way, bets. Like a bad debt is an option contract that's worth $1. And so, yeah, like the thing is we have to right now figure this out because this has happened too many times and I haven't solved it. So let me find a way right now to show you what I'm talking about, which is the volatility in options contracts. And you really can turn any amount of money into any other amount of money, up or down, if you know what the price is going to be, if you knew what the price is going to be. And so which one am I looking for here? Maybe it wasn't any of these actually. Hold on. I have to do some digging. Coin. Go. 87. So I was buying the 87 strike. But when does that expire? Well, how could that be? Let me go back to the charts. 87 strike. Oh, no, that is it. Okay. So then I click here and here. We use our friends Robinhood for this chart. And so now I have to set up a scene. Maybe I could just do this. Boom. Boom. Does that work? You can't see it. We'll switch this from chart to this one. Nice. Okay. So look at this contract. So down 50% today. So like not a good day to be playing this contract, but I played it anyway. And we'll explore some of like these mistakes or whatever. And I am very happy to share those publicly because I want to improve my own trading behavior. And I feel like I've been doing this a lot more than most people probably. And like just the average person, I guess. And so if I can like know everything that I should be doing and then I still make the wrong choices, then people who have no idea what to do are basically screwed. And so, but also, like I said, I want to improve my own behavior here and learn from my, good and bad trades. I have plenty of good trades. Yeah. And I'm starting to understand better and better what makes a really good trade. So like trading Coinbase today was dumb for a few reasons. Although if you got in here, it kind of like, this is what got me into it. Like this looks pretty bullish, right? Boom, boom, boom. And yeah, that looks pretty bullish. But then these 0-day options are so volatile. I was going to show you this. So this contract, you could have bought it yesterday. What is it? Yesterday at 8 a.m. So yesterday at 8 a.m. for 8 a.m. Anyway, it's fine. 8 a.m. for $12. And then you could have sold it this morning for 9 a.m. or the next morning or whatever for 9 a.m. Oh, wait, that's just the same day. Okay, so you could have bought it at any time in the past. That's the point. It was like trading at like 4 or 5 cents. And then boom, people are paying $270 for this contract here. So it was $3 on August the 28th at 2 p.m. going into close. And I bet somebody bought it. Now, then the gray scale news or whatever, the Bitcoin ETF news came out and boom, it's up to $300. Now that's a 5X. I've seen many like 1,200 X's, so double this. And so the trick is not to try to, I'm not saying like that's possible or even practical or like feasible or good to aim at or anything. I'm just trying to demonstrate the volatility in the contracts because you can be on the other side of this, right? You could have been the guy that bought it at $2 and the next day it's at $3 to $170, and the next day it's at $3. And so being aware of just what's possible with options is important in both the upside and the downside. And so a lot of it, I think the job of these kind of professional traders and investors is to manage risk. They are being paid to facilitate trades and, well, we don't have to go, I'm not pretending to know that much about it. Like, you get paid if you're right, you don't if you're wrong. Like, that's about it. Now, with stocks, it's more forgiving because they, like the company can go bankrupt, but generally a stock lasts forever and retains its value, up to like 10% or whatever. An option will go to zero for sure. And most options expire out of the money worthless. But that means that the few that do must pay for the whole party. Otherwise, how would people keep trading them? So Tesla's been a little bit paying for the party. And honestly, look at the order flow. Like, here's my take on it. I think the order flow represents the best, most accurate and reliable signal. Not that you can just buy it blindly, but it, anyway, something down there. It represents the most accurate and reliable signal. Yeah, the order flow. And so, but like, if you just do what they do, that is probably like, you won't know when really to sell or to buy. What you're looking for is what matches with what you're already thinking. And so if something is confirmed technically through your own kind of like perspective and also in the order flow, I'd say that's a good buy. And then anything that doesn't match those three, I don't know, like, why would you buy? Just wait for a time. But it's hard. And so, like, here's why it was dumb to play Coinbase today. They just had this giant ride up. So implied volatility was going to be high. And there's this phenomena in trading, and it's called volatility crush. And it basically happens where, like, a lot of the contract price is set by one of the indicators or the properties, I guess. It's called implied volatility. It's basically like the expected move in the price. And so the more volatile, it's actually the opposite of what you would think. It's actually the less the number is, the lower the implied volatility, the more that there can be a massive change in the price of the options contract. And so if you want to find like a more stable options contract, you can look at Tesla, Coinbase, any of the big tech companies. And in general, those option prices will be a little bit more stable. And that's because they have a higher implied volatility. So it's a little bit counterintuitive there, as much of all of this is. And that's what makes it so interesting. And so we want to figure it out and learn about it. Going back to the charts. So this isn't like, the best example, but still you could just see from, you can be on either side of that. On Tesla, I heard somebody make a comment the other day that like technical analysis has no real predictive power. And maybe I would have shared that opinion actually. But as I've been getting into it, like, just look at what's on the screen and tell me what you see. You see a channel or a pipe, like, right? You see two horizontal lines that are lining up perfectly, where like the top of one in all these ways aligns, as does the bottom, which then aligns to the, like, you're telling me what, that's like random every time, it just happens to be no, it's a pattern. Like, these are predictive. Charts are super predictive. And so I'm saying if you get the technicals flashing green, the order flow flashing green, your thesis flashing green, that's a good buy. Anything else, probably don't buy. And like, so what, like looking at today, you can really use these charts and get to know them as a way to predict the price. Like obviously Tesla was going to have trouble at 260. If it broke that, it would have been the most bullish trend of all time. Like that's crazy. It was just at like 220 2 days ago. But when Tesla moves, it freaking cruises and for like a long time. And so maybe it isn't, maybe it is, I don't know. What I do know is that look at the Bollinger Bands. Look at that. We have the white part. Look at the white peaks. It's a hill, it's a mountain. And then we have the blue tops. Boom, boom, boom. So like all of that aligning doesn't mean anything. No, it means a ton. That's what the technical guys spend their time like trying to get better and better at, and I'm into it. And so yeah, like what is this, 257 to 256? Look at this candle down here. I marked this one just because I don't know what's going to happen with Tesla. I think that, again, generally things are bullish. If I had to guess, we at least will always test the previous day's low, which is what we did today. Now, we won't always do that. Some days it'll be a bull run that just runs. And some days we'll test that low and then it'll tank because we don't find support. But still, like it's not Tesla, it's any stock. The price wants to know how low it can go. For real. Always, always. And how high. And they say, and I think this is probably true, that markets overcorrect both to the downside and to the upside. And that's because they are forward-looking instruments that are trying to find what is real and valuable. And honestly, so that we can, well, people have their different motivations for coming to markets. But when I come to the market, I want to trade. And like I was talking about in the past, I will also want to accrue equity. But I think there is an opportunity to play these markets in a way that is, I don't want to make it trivial, and I want to come to it with all the respect I can. And but still, like there's something akin to a real-time strategy game in the markets. And what is like more exciting, real-time, high stakes, dangerous, rewarding, technically like driven, and has infinite depth to explore and elaborate, and is always changing and has a meta, and people know the meta. And it's a great game, the markets. And so I don't want to trivialize it. I want to respect it. But still, just the concept that there is something akin to a battle happening here. And it is between the red and the green. And a lot of the price movements make sense. Like stuff like this, nobody's buying. That's, it's the middle of the day. All the buying happens in these different periods, and especially around different price levels. And every day, more information is getting priced into the market. And what got priced in today is that people are cautiously bullish, I would say. And that's because we closed higher, for sure. But also, we did retest the lows and held. This candle, though, is pretty concerning. That shows a ton of weakness that is even possible through these massive sell-offs. That's one thing I'm very interested in figuring out how to prevent automatically, is how do you prevent yourself from being subject to a flash crash while holding options. And I saw this dip today. It was crazy. Yeah. But like there, I think that the way that the big guys do it is they have automated systems. Can't be that hard to build, right? We got AI now. Just tell the or work with AI or whatever. I mean, it's obviously very hard to build and dangerous, but I think possible. And or you can just monitor the trade. And I think what you really need is an automated system. And it's pretty exciting what you can build in an automated way in trading using modern APIs, as I was talking about yesterday. So just to explore technical, why would I think we're bullish? Because first of all, we got these giant green bars shafting the bears, which is like, we love to see it. And then when did we start the day? Right here. Yeah. This is the trend. This is the pattern. This is what we do. We spike up in the morning, and then we gap down to test the previous day's low, or whatever, some level. Oh, hey, look, it just matches. It's magic, right? No, it's like a pattern, freaking real pattern to 250. And that's a psychological number. It's a nice round whole number, makes sense. And so immediately gets rejected off the bottom. And because we were talking, I bought like a dummy, like a FOMOer, like I'm never going to get a chance to buy again, or like get FOMO out of your mind. Like you should be so lucky. You should be so lucky that this is the last day the price will ever be there. That's not true. Like that's never going to be the case. Disney is trading lower than it was 5 years ago. Like you got to be an active participant or like hold what? I don't know. Tulips. Like what holds its value? I don't know. So coming back to what is clearly patterns of history that allow us to predict the future of the price, which then gives us an edge. And going back to the order flow, this gives us an edge. And then hopefully we can find other edges of our own. I think one of them that can be done is timing and execution speed. Okay, well, this is like showing off my bad work. I'll just tell you now that we're here. So one thing that is improving things for me, but also I have to be very cautious of, and I did it all wrong today on Coinbase, is upping the unit size when we are retesting a low that was a previous point of support. And so I did that properly here on Tesla because I knew it also. Like I've been paying more attention to where is it there, these prices, and so that was kind of an obvious one. But yeah, like I think there's something to like deploying, like, okay, I'll just buy one unit, kind of ping ping ping. But where you want to up the size, the volume, is when the first time you're testing the previous period's low. So if you're operating at the day level and you're worried about day to day, not worried, but you're like focused on day to day, that would be, you would want to look at the previous day's line of resistance. Same thing for the week and the month and whatever period you're looking at, you want to look at like, where did we have the lowest low in that period? Now with Coinbase, we're in no man's land because we gapped up and went on a run and it was crazy. Like, I mean, the price is so high, it's nuts. And yet every day we see these 0-day options coming into the market, which makes me think they have to be onto something. They have to know something or they wouldn't be doing it, right? Like, I want to know what they know. And so this candle just shows you how like serious the world of options can be, because this looks like not much. No, that's a big candle. What is that? a buck 50. Yeah, like again, but it's all psychological, because if you sold at the bottom, you nuked yourself. And if you sold calls above your option, which is actually a great strategy, if done well, like the worst time to sell a call is like panicking on your way down, because you're like trying to like get out of the trade a little bit or whatever, hedge the trade. But like if you had opened the trade hedged, then you would just be at 50-50, or which is, there's pros and minus, or pros and cons to those what do you call it? Multiple leg option contract spreads, I believe they're called. And so, yeah, but like the point is, this is like a warning. I feel that's a warning. But what it really is a test of the price. And what does it tell us? It tells us that somebody is buying at 250, 420. Okay. And lo and behold, that was a prior point of resistance twice, 3 times, multiple times. And so what was our prior resistance becomes our new support. And not always, but like, look, it just did it, and it does it all the time. It's like, how often does the red and green stay in the blue? Like almost always, but not always. Look, it doesn't all the time, but almost always. And so like, that's great. These are great indicators. And I think they're available to traders for the first time in history. Imagine what somebody in the 60s would do to get their hands on this kind of a chart. They'd be all at Twitter trying to chart it up and get into the data. So look at these green volume bars. What way? That way. Look at that. Let's zoom in. Boom. No. How do I zoom this? Well, anyway, you could see it. Like, what's going to happen tomorrow? I don't know. Nobody can say, but we can go and we can read what the insiders were doing. Oh my God, a bunch of fucking crazy premium coming into close. Like, these guys are buying this next week's expiring options into close. If we gap down, they're nuked. And they know something. Green volume bars. Tape. What time is it? 3:59. Oh, it's 59. Like, what? Yeah, they're like, let's go. Like, they know. Their systems or whatever is telling them that this is a bull market and that it is risk on. And why is that? Because we can only play the game of inflation for so long. At the end of the day, like, people are making money and like they're working and producing real and valuable things. Products are being not only always improved, but new ones are introduced and backed by services, and companies are just making more shit than ever. And like NVIDIA just sold like 16 or 50 or 40 billion dollars of their chips, which sound delicious. And so we want to buy NVIDIA. And look at all this other chart stuff you get too. Look at this. You get this, you get the RSI. That's a great indicator. Is it like perfectly reliable? No. What it means is like how overbought or oversold you are. So was there too many buyers or too many sellers in a given period of time? That's what it tells you. So if it's up, you want to sell. If it's down, you want to buy, is how it works. So like if you see it up here, that's sell. If you see it down here, that's buy. But not always. And so every indicator stacks up. And through that, I think you can create a signal that these guys have gotten really good at finding and taking advantage of. Because these calls right here were trading for pennies yesterday, and they might trade for $10 tomorrow. That's why they're in these contracts. And I believe they do have like a lot of, speed and automated systems and advantages that are kind of like only for them or whatever. But still, like, just looking at what they're doing is so interesting. And so we got puts coming to close. What are these? Out of the money puts. Wow. Interesting. So this guy is playing the exact opposite. And that's why I was saying on the chart that I would say it felt to me like cautious bull. Like, there'll be money in the market. If anything happens, they'll put it so fast or whatever. You got to have your puts ready. And we'll show this in the charts in a minute, but you could see this guy's playing the exact opposite action, and this guy, or maybe they're hedging. I don't know. Like, I'm not saying that, like, again, anything can happen tomorrow. We could gap up and it could be a crazy bull run. We could get bad data on, what do we got? Job cuts. Anyway, more like PC price data, whatever. Like, the market might not like the numbers, and so people put the shit out of it. But we're going to see it coming in basically live, not quite live, but pretty live. And that really does align with the price. And so right into close, green, 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 right into close, green, green, green. If we go back a little bit earlier, we open to kind of a mix, and then we start getting the puts come in. And I guess the puts had their run. Where is it? So see this put wall, boom, 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 boom. I'll show you right where that was on the chart. So we get a couple of like mixed calls in the morning, first few minutes of trading. It's like crazy chop. And then that's these put walls coming in. Okay. And what time is that? Let's just verify it. 38. And this is 39, 38. Yeah. So, verified. And then we get some calls up. Let's fucking go. And puts are like, no, you won't. And then, yes, we will. No, we won't. Back and forth. And then we got put again. And that's right here. Boom, 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 boom. Because when we bounced off of the 250, the bulls took control. And then what did we hit a ceiling at? Oh, there's a line there. 256.12, which was what? Doesn't look like anything there, but whatever. Lines up with something. I believe that lines up with the Bollinger Bands, actually. And so you get some maybe even automatic selling happening just to see what happens. And then there's a struggle and the sellers take control. And now what do they want to do? They want to break 250, obviously. And so there's no good telling, like, if they can or can't. We don't know if there's buyers at 250. Maybe they got exhausted right here. Only the sellers testing the price will we find that out for this session. And so they test it, and they're able to get it down to 250, 182, which is pretty good. It's pretty good. Job, sellers. Good job, sellers. And but then the bulls are like, we're gonna buy. And so then there's like this big buying spree up to, and then we can see that in here again. Buy. See all that? And then that aligns with the green bars. And so, like, you tell me, is all this shit made up? All these horizontal lines that line up with everything made up? The RSI just happens to align with like the volume bars, and the tape happens to align with the price action. It's stupid to argue, actually. And so we won't spend any more time on that. Like, these are predictive tools. They aren't like, I got churned a ton today. I'm not saying it's easy. I'm just saying, like, clearly, both through technical analysis and analysis of the order flow, we can create a strong signal of buy and sell. That's what I think. And I don't know why I'm so defensive about it, but like for real, like I think that this stuff is not like you can really predict it, but you can to some degree predict it. So here's the prediction. Here's my prediction. If they can, the sellers are going to want to test 250. And so we have to like take advantage of that. But I doubt they're going to get a chance. I think it's going to be the exact same action as today. It's going to be cautiously bullish. And so what does that give you? It gives you an amazing buying opportunity. I think the best investors sit there and they have the chillest job in the universe. Like they just kind of wait for whatever their thesis is, which they've like developed over years. And then when the price hits the level, they hit the button. That's it for the day. They're done. You know, they don't think about it. You want to know why? Because either they're buying stocks, which don't need much more management, or they're using a system which adds automatic insurance. And either way, they just know when they want to buy. And that one transaction is like everything. I love this idea that like I would never do this because that's not why I'm here. But if I could only make one trade a day, you know, like that's a good thing to consider. It's so easy to churn yourself over trading. It's so easy. And so like that's why you have to like get your trade data and like actually look at the numbers so you know exactly how much you're churning. If you're in a bull market, the problem is it can be very forgiving of a lot of bad trading behavior that is going to be quickly exposed if you're not set up for the other side of the trade, which I've experienced firsthand. But like I said, we don't care. I'm talking about minute to minute following the price level in trading. So like if I'm feeling like I should put some units into Tesla, I'm going to look here. And if I see a put wall coming in where it's like, boom, look at that. These are going to come in rapid succession. What is that? 7 minutes apart, another 10, 13 minutes. So like over the course of a half hour, we get this put wall. And what is that? 936. Let's see if we can find it. 936. Where is it? Okay, so that is, was that the other one? No. Well, anyway, that probably, oh, you can't see it. That probably aligns with this. So it's not a crazy decline, but still that's enough to benefit from the price action. So, and then the biggest thing is your entry and exit points. Like maybe there is a good argument to say that like you should open every trade as a spread trade and then like just widen the trade, or, you know, like the cool thing about options is you can control anything with anything. So like I could buy the most expensive contract on the market. I'll just do a spread for like $1 below it. And then you're controlling like two $50,000 contracts, but you're only exposed to the risk of that spread. Now, what I think you can get very good at is creating spread trades, especially credit spread trades. This is technical, but we'll get there. That not only, this is where you make all the money. I think you make all the money on calls and spread trades. So here's how like I would have done it perfectly if I didn't do it bad, but like if I knew everything in advance, I would do this. We always are gapping up into open. Always sell a couple of calls right here. Because the price is the trend lately has been spike up, crash down, test the low. We might just keep cruising, right? We might just like gap up 10 more times and then those calls get nuked. So like I'm not saying that doesn't have its own risk. Still sell some calls right here, take the premium and just buy like the 3 week out puts for like $1, like go down to the strike price for like $1. I'm not even like, that's, a very unsophisticated way to do it. I'm just saying like, find a cheap put a couple of weeks out real quick. You're going to sell it in like 2 seconds. And then what you're going to want to figure out is how low the price can go. And today, I don't think it was like anyone's guess. I think the reason it ended up being 250 was the psychological level. And tomorrow, I think they'll want to test 250. They'll try, but I doubt they're going to get there. I bet they get to 240.20. Maybe they don't get far past 242.20. This kind of looks like something right here. What is that? 253.10. What is that? Boom. Look, I'm looking at this and it aligns to this and that. Whoa. Oh, it's magic. All the timestamps, everything aligns. Why am I so aggressive about it today? So anyway, that's why I'm interested in this technical stuff, because if you knew what the price was going to be, like, you really could take tremendous advantage. Now, not everything is about that. I'm not saying like that's like the one goal in life, but it'd be pretty fun to do. It just like is a win. Like, it'd be fun. What you want is like a high units options contract that is undiscovered and then pops. And I've definitely had it a few times, and it, gets you a little bit chasing that momentum or whatever, that win again. And so a lot of this trading psychology, like I think one of the things that benefits me in my trades is I have pretty good execution speed. And these days I don't spit into the wind. If I see that the bears are being bears, I'll at least try not to be a bull. Now, I did like the signals are not always clear. And so if we look at Coinbase, kind of did look bullish, but right, that looks pretty bullish. First of all, those came into close, so that's bullish on the next day. If you actually looked at the premium for the day, there wasn't a ton of premium. Like this 1.2 million block came in, interesting, but that was actually at a pretty good level. And so, yeah, generally there actually wasn't a ton of volume. They just had a pop. They're bound to do some level of retracement. The IV is going to be high and get crushed. That's 3 good reasons not to trade coin today. Like those are the kind of things that I think you can build up in your repertoire. But like, I want to chase it because I love Coinbase. I want as much Coinbase as I can get. And the psychology is like, you really do have to reverse it in your mind and wait for the price to come to you. Now, people have been waiting to buy Bitcoin at 300 for a long time now. So it doesn't always work. There's a risk in every side, to the upside, to the downside. So, anyway, that's Tesla charts and lines up with the tape, and that's cool. I don't really like this flow overview anymore because it's not accurate. Like this isn't accurate. Tesla had super bullish action. These are people hedging through selling calls. Maybe they're taking some credits just to have an income, or what are they selling? 250? That's a hedge. I mean, interesting. Nobody knows what the price is going to be. It is impossible to know. And so we have to use these, not have to. It's awesome that we get to use these technical indicators to give some kind of like guidance. But all of the good tools and technicals in the world won't fix bad behavior. And so like, I'd be really interested how other people have overcome their psychology in that way, where like you're not chasing, you're letting things come to you. and you're really committing to trades. I think that's also an important thing, is you're going to get churned if you're just doing too much trading. You need to be doing like a few big buys. Now, maybe you can manage multiple positions and then you can like enjoy the action all day long. But I think each one of those buys, you should be ideally buying like 3 times a day, or then you sell it all at a loss, right? What are you buying? You're buying the previous day's low after it finds support. After you think it's found support, by however you measure that. And so today we didn't have that, but like if we go back and look at another day, when's this session? Friday, Monday. So let's go to the previous Friday. Okay, so here's Friday. On Monday, our low on Friday was what? Boom, right here. So this is what I would say they want to test. The sellers want to test this line at least. And then they're for sure going to want to test here and here, right? And so, but they never get the chance, because everything I'm saying gets proven wrong here in Tesla, which is part of what I'm saying is nobody knows, nobody can know. And so the opposite thing happens here, where no, we don't test the previous lows. We just freaking have a giant, like fill the gap up to 250. So that actually happens, but like, let's be cautious and show like a working example of this. Thursday, there's the low. And so what happens on Friday, Friday is, so this was Thursday's low. So Friday we gap up, boom, boom, boom. We have this top at 235. We get all the way up to 237. Holy shit. And then oh wait, no, that was on the way up. So our first top was 235. And then we find support at 232, far above the previous day's low. And so the previous day ended at 230. And then it's just like, look at that rocket, boom. And yeah, that's that. Oh yeah, okay. So then this is a good example. So then we find the ceiling, and if we put a line here and then we scrolled back, we could find a reason probably why that line is there. But let's look at this real quick. So then we had this massive run up here. I wouldn't have known where to sell here really, just by looking at it. But on the way down, for sure I know when to sell would be right here. Because when we break that previous point of resistance, of support, now we get trapped in the box. That's what happens every freaking time. Like, not every time, but the majority of the time, if you break a lower low, you're going to even go lower. And so what do you do then? Now you inverse and you're buying puts, and you're putting it down so that, like, ideally at the very bottom, you do an equity swap from puts to calls, and then you can enjoy the ride up. Or if you're in a bearish environment, the exact opposite. You're buying calls at the bottom so you can short them at the top and then switch that into puts and drive the price down. And so enjoy your action however you like it and wherever you think it's going to go. But like, we should be agnostic on price and just benefit from the action. And we can have our long-term thesis on what we think the price will do. And so, but as a day trader, it's so impossible to make money to begin with. Like, we need everything aligned and in our corner to even have a shot at generating like good returns, right? That's why you have to have the technical picture and the flow and the whatever your thesis and news, market events. Like, don't maybe buy a bunch of YOLO calls into the day before Fed like sessions or whatever, because people hedge. maybe that's a good time to buy puts. And so either way, like, I think, what is the goal of all of this? Is it really just to make money? Yeah. I mean, there's like, it's pretty cool to be able to like make money in the stock market, through your time and attention. There's probably better ways to make money, like probably, like building a product or whatever. But, I don't know that there's more fun or interesting ways. And so I'll take less money, more interesting times. Please and thank you. And yeah. So that's probably that for Tesla. ARK is looking pretty strong. Tesla was bullish. I mean, it just had a massive run up. Now, why would I play Tesla versus Coinbase? Like, that's a good point, because that's a good criticism, because Tesla also just had a massive jump up. They also just had IV pop, and like, it is a similar setup to Coinbase. I think, I don't really have a good reason for the difference. But I do think that, like, I guess this is why it's about volume. It's about where the premium is going. For real, like, if we actually analyze, we go back to the tape. Boom. Is this it? Let's go Tesla. Okay, so we have 22 million a premium versus 2 million. And so you have 10x the premium going into this company, and that is going to move the price. This is another reason we look at this. I saw these coming in. I'm a big weed guy, as we all know, right? And Tilray just got called rapid fire succession right around 12:15. This is the first to know, first to act. And look at this, 29 cents. I mean, this bloomed. Like, these contracts, that's an easy win. Now I had a slightly, I participated. Why? I would love to get stuck with some Tilray shares, and but yeah, I didn't buy calls or anything. But still, like, the price, we can go see. Oh, I wonder what happened after 12:14 p.m. I wonder. Like, it's a big mystery. What is it gonna be? So what was that? 12:40. Oh, a massive green shaft up right there. What time? 10:10. So that was 12. Okay, so this must be like Eastern or whatever. This is at 14. So did they miss that? Oh my God, is it right? They miss it or what? 12:14. No, I can't find that. Okay, so those buys actually came in after this. So that does not look like this was insiders. This looks like people were buying the news more, to me, because that's right then. But like, how could they be so fast? That's crazy. What is that gap? 30 cents. I mean, yeah, like, look, like all that. I mean, how much did they hold? So those, we could look it up, but I'm sure those calls did very well. And that is why I do want to build like a tool to be able to watch the order flow live, because not only would it be cool, it'd be like a waterfall of like information and price and trades or whatever, but it would be also, I think, an incredible indicator. And so, yeah, I don't know, like, why trade? Why do anything? Why do anything? Like, I guess it's not maybe like these are high risk, high reward strategies. And to me, that's one of the most exciting things. And why not? Why not like learn how these guys do it? Because when we go back to this tape and we look at the premium, this is another reason why you have to like learn these indicators. If you just look, it looks bearish. But if you look behind the curtain and you take out what they're, wow, look at this. First of all, people always put in a close, but that is a lot of puts. on Alibaba, Disney. Whoa, 8.9 million. All right, now we have to see it. What happened on this? I cannot believe. I wonder how low it can go. I think I looked at the past and found like it had incredible support right around here. And so maybe that's breaking down. 5-year, right. What is that? The low is 84.97. The low is 85.95. But we penetrated that, I think, recently. 84.97. We had to penetrate that. Let's take a look. Look at these green bars into close on Disney. Well, that doesn't make any sense. I guess this is the final minutes of trading, and then somebody did a massive put, maybe as a hedge. Who knows? But this is just it seems like such a good time to get Disney. I don't think I got any. I should get some Disney. But yeah, like look at this. Boom, 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 boom. Actually, pretty good time to buy Disney. And look at this line. Anyway. But who knows, right? It can crash tomorrow. Anything can happen. So, and generally, I think the default is crash unless people have a reason to buy. I think there's a lot of reasons to buy, but they're not always apparent or active. Look at all this. Size is huge. Disney, wow, interesting. But anyway, mostly it was bullish. We could see on NVDA tons. I like seeing coin calls. I don't know why people aren't more bullish on Hood. Hood's like one of my favorite companies. I just think that like fintech, yeah, nothing. I think fintech there's so much possibilities. Like I used to think that the banks were all gonna like go bankrupt. Now I think they'll just all become JP Morgan, the big three or whatever it'll become. And most of financial services, people will be their own banks because yes, it takes a ton of time, energy, and effort to learn all this stuff. But I do think once you learn it, you can really take advantage of it if you can do it in the ways that the smart money is doing it, which is what we're here to learn and not to claim that we know. And if I knew, I'd tell you, right? I don't think anyone knows. I think all you could do is get, systems and experience and then keep evolving or whatever. But I know that I'm definitely a better trader than I was 2 weeks ago. That's for sure. And I'm way better than it was 2 months ago. And I'm certainly infinitely better than I was 2 years ago. And so, there's a lot that you learn. And it kind of like is a double-edged sword because the more you learn, the more you feel like you can take a risk. That's where you learn a new thing. And so that's what the kind of lessons that I'll be sharing on this show. I'm not wrapping up. I don't know why I'm saying it like that. Like we're hanging out. And so, yeah, look at all this bullish action. See what it was. I think Apple was mixed. Pretty bullish. Apple is a crazy one. They're 3.4 trillion? What is Apple? Anyway, whatever they are, they're the most valuable company in the world. They're constantly buying back their stock, and the price is out of control. Like it is in completely untested grounds. All of the big tech companies are in untested grounds. And this makes me think there actually really could be an opportunity for a new short, like an epic short. But then I think like, how are they really going to come down? I can't come up with an idea. They would have to it would have to be a economic disaster coupled with a world crisis, like it'd be like Russia invades Ukraine during the pandemic type of deal again. And then they have bad earnings. I just cannot understand how you take down Apple. It seems like the monolith or whatever. But yeah, maybe like if you look at the price, my whole thesis is that the price always has to retest the previous low. And so with Apple, that would be like down to like $80. Like, check this out. The long view on Apple is bananas. Okay, so I would say we have really solid price history. Backed in 2010s and all the way up kind of until the pandemic. And then things go parabolic for all these companies. And so we have to like zoom out so you could see it. Like, let me just show you where the pandemic is. Where is it? Boom. Okay, so everything from here on below, it would be hard to imagine us getting a test deeper than 50. Because maybe if we did get 50, we could get like, a peak deeper. But I doubt it. I bet like 50's impenetrable. At some level, right? We're not going to retest one. So like at some point, the price does become untestable again, unless there's a bankruptcy or whatever. But to me, it looks like 55 for Apple. All this above stuff, this is chop. And this is like nobody knows where to put their money. Well, there's inflation and interest rates are going up, and Apple's doing buybacks and they're crushing it in like awesome product releases and crazy earnings. I think they are just still printing cash and they have tons of cash to begin with. Incredible. And so like, I'm not saying I know the reason why this price should be retested, or I would like to talk to an expert who would disagree. Like, somebody tell me why we're not going to at least retest from 80 to 200. I'm not saying we're going to 80 tomorrow, but like, this is my whole thing. I mean, that seems like such a solid level. Like 115, damn. 115, 80, 60. I don't know. Like, I think that there is a reason why the test must happen. And we'll find out. Like, maybe Apple will keep cruising forever. Okay, back to the tape. Yeah, like I said, you kind of have to do some filtering to like get a clear picture of what the real action was, because some of it's hedging, some of it's whatever. I do think that Tesla is like the most is bellwether a word? Like, it is its own indicator on market sentiment. When Tesla's going down, the market isn't going up. Like, you can't have, somebody said this, like, can you have a rally without Tesla? I don't think you can. I think Tesla is the market leader, outside of maybe Apple is. Yeah, I guess Apple is the real market leader. Obviously, they are literally, but I'm just saying for the future. I just think when everyone's driving a Tesla, it's gonna be crazy because it's way better than a regular car, times a million, and it's going to be cheaper than a brand new Honda Civic, which is a great car. So like, day one, it's a matter of time. They do have to build the cars. It's true. But in the fullness of time, I do think everyone's driving a Tesla. Now, maybe somebody will do it better, right? It's possible. Generally, Elon Musk has a history for designing and deploying next generation ideas. And so, like, I don't see why that would change. But yeah. And even this picture, you have to dig in. Like, Tesla doesn't belong in the bear column. This is sold calls, belongs in the bull column, as well as NVIDIA, which keeps getting called. I can't like NVIDIA. I feel like I can't touch it for the same reason I can't touch Coinbase, but that's wrong. What is the reality is you got to have your entry points at the right time. And what is going to be the right time is going to be signaled through the flow and the indicators and the news and the flow, all that stuff. So more calls coming into NVIDIA into close. Wow. Massive premium. Look at that. 500 gram into close. High risk. Now, this is for 2020 or September, end of September, but still pretty high risk. Because when you're doing things into close, you're making a real bet there. You're betting on the next day's price action, which is like nobody knows. You're going to get a real strong indication in the first few minutes. And then also that day has events and data releases and all types of different things can influence the price throughout the day. So when you're making a call at the end of the day, you're essentially making like a unhedged bet on something that you could just place that same order tomorrow morning and have infinitely more information. Things change overnight. You know, like the picture changes overnight all the time. And so to me, that's very, very bullish for NVIDIA. Let's see the put. I mean, look at this. Bullish all day long. I should have played NVIDIA. Shit. See, okay, so now we start getting some put action around 210. So noon for me. Let's see what it is on the chart and see if it lines up. NVIDIA, noonish. That's like the year reset. Well, let's get all this junk off the screen. I think some of those are probably important, but figure it out. Okay, so we wanted to see at noon and see if these puts line up. Where are we at? Wednesday into noon. Yeah, right there. Well, okay. Draw your own conclusions. That's what I'm here to share on the show, though, is like, I didn't know about this. I just found this a month ago, like 2 months ago, something like that. I would have been blindly buying or selling is what I've kind of always done. Now I have the opposite problem where I feel like I get a little too confident because I have all these different indicators and signals. But obviously, like we all, you know, it's that overcorrection mechanism. And so the sweet spot is I really do think to pay attention to all of your indicators, but also to incorporate the order flow. Now it comes from a company called Cheddarflow. They have a subscription. I pay for it, but I do want to start also sharing the order flow through my own tools. And that'll be a fun thing if I can share that. And so, yeah, boom. Like NVIDIA, put, ask. Like that is a nice wall of puts. And so if you were day trading, which lots of people enjoy doing because it's freaking fun and, you know, dangerous and exciting and all the cool things that people get into. And so if you're day trading and you want to go and play around in NVIDIA land and you are like agnostic to the price and you're entering at noon, do you open with a call or do you open with a put? You obviously open with a put. Why did I even have to say it so long? Like, look, you open with a put, super put it, right? You put it until you start seeing the green start stacking up. And then now here is the problem. If you were waiting for all this green, you missed it. Like this guy, 232, he got it perfect. Let's see, 232 on NVIDIA was what? 232. Where's it? This candle. Okay, so that's his trade is right here. Like he's that shaft. Can you see it? He's the where's the mouse on the screen? Okay. This one here. Yeah, you could see it. He's the green shaft. This guy. The 232 guy. And so like he is getting the most benefit. Now, since he knew to be that big green shaft, I bet he knew to hold until here. which is $4.95. Who knows when he sold, right? Maybe he sold right away. Who knows? But he, for whatever reason, knew to buy then how much? 100 grand. And then we get $250,000, $250,000, boom, 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 boom. Maybe that was actually the same trader. Who knows? These are real people. Like, there's a person behind this trade. His name is Jorge. I don't know what his name is. Like, could be anything. Could be a woman. Of course it could be. But yeah, like, it is pretty fun trading around. And like, I think we're in a bullish environment, and I think everything's going to be hunky-dory fine with the markets in about 6 months to a year. We'll probably have ups and downs, but that'll be the cool thing to capitalize on. And, you know, I'm spending like a lot of time and energy on this, so I don't necessarily need to have any outcome other than the pleasure of doing it. But it would be cool to actually like be able to prove that there is a reliable system that can be deployed to participate in the highest levels of trading with the biggest players and, you know, capitalize like they do. And I never knew that all of the trading that happened in markets happened in options, and that all the trading that happened in options happened in options that were expiring in the next 7 days. And then of all that it was basically on Friday when they do expire. There's a ton of action. And so too dangerous. Don't, you know, like 2 weeks out is crazy volatile. But there's a reason why they are buying these calls into close. And it's because they know something. So I'm not going to sit there and pretend that I know more than somebody who's thrown 500 grand into NVIDIA into close, like they know something. And we want to know what they know too. Before we conclude today's session, let us look at the dark pools and see what they were pulling. Oh yeah, I need my dark pool view. One moment as I pull it up into the dashboard. 0? No, 1. Oh, it was 0. Well, anyway, you can see it. I can't even see it. Let's see. Dark pool, dark pool. I don't know why that isn't lining up. Let's just fix it while we're here so we have it good for next time. Boom, boom. We're hanging. It's fine. Just, you know, dead air is fine. I will never stop quoting from It's Always Sunny in Philadelphia. One of my favorite shows of all time. Just such a good show. Okay, we got it. So I don't even know if there's anything to look at. 1.5 billion. There was stuff to look at. 3 billion. And so this is like Saudi Arabia princesses and like big oil and maybe like Winston Churchill's ghost is where this dark pool money comes from. Like nobody knows, right? That's why it's a dark pool. But it's $3 billion coming into SPY. QQQ. Let's see what you got. Not much. Tesla. Let's see what you got. Not much. NVIDIA is going to have something for us. NVIDIA. See, they already dark pooled on NVIDIA. 1.1 billion. I was wrong. Wow. Wow. Somebody is taking a position in NVIDIA at 492. That's crazy bullish. What the fuck? Into close? I mean, that's crazy. I've sold calls. I got to get rid of them. Okay, well, let's see what happens to NVIDIA tomorrow. Hopefully you guys saw some of what I was trying to show you, and that this isn't impossible. It is difficult. It requires changes of like strategic thinking and behavior, and usually you can't actually follow your impulse. Your impulse is probably wrong, because when you want to be a buyer, other people do too. And so generally that means it's a good time to sell, and vice versa. Not always, but often. And so learning from our past trades and finding I have some secrets. I do have some secrets to share with you guys that I will reveal when the time is right. But there are ways to hedge and basically swap equity across the chains and even anyway, we'll share all that down the road. No need to give too much of away. We got plenty of time. So we'll see you guys next time.